So now we're moving quickly from this overarching perspective to more of a country experience.
Yes, we now turn to experiences and examples at the country level. Okay. Our next speaker is Njuguna Ndungú, who is the former Minister of Finance of Kenya and the former Governor of the Central Bank of Kenya, with long experience at the intersection of macroeconomic policy, financial sector development, and research. And you're not just former, you're now current professor at the University of Nairobi. A warm welcome.
Okay. Thank you very much, and good morning, everyone. It's an honor to be here, and it's always an honor to come back to Sweden because this is where I started my journey. I'm a product of CEDA, so I know the kind of... Is it working?
No, yes, it's working perfectly. Okay. Sorry, I'm just going to...
Okay.
Yes, no, yes.
Yeah, I am a product of CEDA, and so most of the perhaps areas I'm going to cover is what I really have covered through my own experiences and also practical life. And that's why when you hear somebody is XX, then you know he has covered a lot of space. So, but that is interesting. I think I was taught to talk about what aid can do and what aid cannot. But the most important thing is that there are so many examples out there, and I listened to Rachel, and even the discussions this morning is actually very exciting. But one of the things is actually to go into experiences and maybe generate my own kind of structure from there. So let me get in, and then of course we can move into substantive. And the first thing is that when I look at the countries around Africa and even where I live, one of the things is to look at what are the constraints. And this is quite substantive because the policy levels and even policy success is actually very much dependent on the capacity on the ground. And one of them is the quality of institutions. Weak institutions are a major problem. And because of my experience, actually, I go into even what kind of institutions are we looking at. Most of those institutions are actually regulatory institutions. And the most important thing is that they have a very dual role. I used to talk about it when I was in the central bank, and I used to say that their institutional DNA, they must uphold the legal framework. The rules of the game must be upheld if you want things to succeed. And the second one was, actually, they have to define appropriate incentives. And that is the kind of reward structure that is going to help you navigate through most of the areas that we deal with. So you see where markets are functioning is because the regulatory institutions are working. They have defined the appropriate rules, and they have defined the appropriate the incentives. But then what do we find across so many countries? Capacity at individual level and capacity at the institutional level. So that's why I thought maybe looking at capacity at the capacity at the individual level and institutional level can give us a good grounding in terms of how we can support or even how aid can be effective, because it is going to be targeted towards capacity building at the institutional level and the individual level. And I have so many of those examples, and I think that is where we can lessen the constraints. Let me try to explain this. First example is the African Economic Research Consortium. I like this example because I found myself researching in the institution, I found myself supporting the institution in wherever I went, and I found myself even working in the institution. But the most important thing is that it was formed in the 1980s, started in 1984 as a project, and in 1988 it became a fully-fledged institution. And it was supported with the first aim. You know, actually, the argument then, those were the days of structural adjustment programs in Africa. Remember the way they were resisted. And the conclusion was that those policies were being resisted by African governments, not because they were not appropriate, but because they were not understood. So what was the solution? The solution is that let's build capacity through research, especially for the AERC, the African Economic Research Consortium. Let's build capacity in teaching economics at the graduate level, because it was so difficult to do that at a graduate level. And then let's see how we can actually influence future leaders and future policy leaders across Africa. And this worked. There were a group of development agencies that did that. CEDA was one of them, founder member, CEDA for Canada, USID, DFID. Then there was philanthropist, Ford, Rockefeller, MacArthur Foundation, and then multilateral development institutions, the World Bank, the African Development Bank, and they were all coordinated by AERC, which was the main formative body of AERC. But the most important thing that I want to talk about is what has happened since then when the AERC was created. We have seen capacity all over Africa. And that is the beauty about AERC. Because we have seen at one time, I remember we counted governors and ministers of finance across African countries. There were actually maybe the majority of them. What was happening? It was strengthening institutions. And for me, it has been very, very much important because we have seen periods of policy clarity. For example, in Kenya, we had a group of economists, including also in Rwanda, and they came up with long-term vision, Vision 2030, Vision 2025. My argument then was that they are creating areas of, or promise of policy clarity. The second example is financial sector deepening trust. That is FSD network. Again, it has been very, very important in terms of supporting financial inclusion, for example, and financial sector growth in so many of the countries. For me, this has been very, very important because most of the financial development, most of those people excluded from financial development was because I think there was no clear-cut policies of how financial inclusion works. Everybody thought opening a bank account was much easier. Even for us, for example, I was working with in the University of Nairobi, and maintaining an account was a very difficult thing, but you had to maintain one, but it was very expensive. What was missing, and we call it the missing middle, is how you can actually come up with transaction. It's an example that I'll come to. But the most important thing is that FSD networks supported regulations across. And that for us was actually help to legitimize even the retail electronic payment system. I'll give the example of M-Pesa, but it comes in with financial sector deepening a lot because essentially we started the M-Pesa without a legitimate legal framework. And obviously, who comes and complains about it is always not the public. The public is safe, but Parliament would like to ditch it. IMF had big fights with the IMF. And then what we did to ask FSD, can you help us legitimize by coming up with a regulatory framework for retail electronic payment system, that is the M-Pesa. It worked. And so we have seen FSD network across countries working. Right now, in the last perhaps 1 year or so, I've been working with FSD network to try and actually support cross-border payment system. Since 2012, we started in East Africa countries, we started a cross-border payment system, but it never works, East African payment system. Why? Because essentially, it was always difficult what kind of instruments you're going to use. But right now, we have found a way. All consultants coming from Europe, they said, oh, first of all, you need to have one single currency. If you want to kill an idea in Africa, is to say, oh, you should have one currency. It is not going to work. The second thing is telling everyone that let's have a floating exchange rate. Most countries will still prefer to have capital controls, and all these are problems. But I think we have found a way in terms of coming up with a payment system that is currency neutral, because again, that is the main thing that is very, very important. So the FSD network, since the establishment in 2005, have been very, very critical. And CEDA was a founding member and continues to do that even to date. But let me now come to something that has influenced financial development in Africa. I sometimes call it the tail that wagged the dog. It's called M-Pesa. It was a difficult concept, and it's what it is actually a retail electronic payment system. One of the important things is, if you have a retail electronic payment system that actually navigates across market segments, and don't forget that African economies have segmented markets, and segmentation is dependent sometimes the distance from the center and even income levels. So segmentation can have different combination. But if you have an instrument, and especially a retail payments instrument that navigates across those segments, then you know you have succeeded. And of course, everybody comes and says, oh, this is the time we are going to formalize the informal sector. Remember the issue about the informal sector. And everybody says, oh, we are going to formalize the informal sector. No, we did not want to formalize the informal sector. We just wanted to know how, for example, they are doing and how we actually formalize their payment system because they come into the system. But let me talk about how did it work. The first thing, and it was in 2007 when I just joined the central bank, and it was a major task even to accept what was happening, because I found a very hostile central bank telling me, no, don't talk to those people because this is a money laundering tool, or what they called a pyramid scheme that time. And when I invited them and I said, let them have a presentation and let's hear what they're talking about, nobody asked them questions. Of course, I had done my homework. In the end, I said, we have found a tool which is going to help us in our journey for financial inclusion. That is M-Pesa. Of course, when I made the name M-Pesa, everybody was getting confused. So I realized I should call it, let's call it Retail Electronic Payment System, that you can use your phone to transact. You can use your phone to send money to your account or even to pay your account. It became inclusive, it was accessible, and it was real time. This was the first paper that the World Bank produced to validate M-Pesa. And those words are taken from there. It was suitable for both formal and informal sectors, which means that it was actually very, very important. And we have seen that it can be given, or it solved the missing middle problem of financial inclusion, and the policy drive was quite important. But the overall effects is that banks discovered that this was an electronic tool to help them manage micro-savers and micro-credits, because they don't have to go to the bank. Just push your money. I know I was helped so much by especially the Gates Foundation to move from transactions to savings. And Kenyans have, at the retail level, and the informal sector were very good in terms of, because we had limits how much you can transact, they pushed back to their savings account, which had no limit. There was a lot of exercise in pushing back and pushing forward. So all of a sudden, it changed the way we thought about money, because now these were electronic units of money. It changed how capital was raised. And more importantly for me, it solved the problem of monetary policy. When I joined the central bank in 2007, my biggest fight with the IMF was to tell them that, look, the monetary policy framework that has been imposed on Kenya is actually obsolete. And that is not a statement that is good for the IMF. Why? Because I found that they were tightening monetary policy and not getting any liquidity from the market. And one bank wakes up and says, oh, you want liquidity? They quote a price, an interest rate that nobody would even think about. But then we realized that there were more problems than that. One of them is growth was more vibrant than the liquidity that was there. And secondly, obviously, nobody ever checked whether inflation numbers were correct. Having studied inflation dynamics in Gothenburg University, so I went there I had all those credentials. We ended up showing that actually, given that M-Pesa introduced a new dimension of how we think about money. It changed the way we hold cash. Then it means that you needed to change the framework of monetary policy. And it became clear, even the IMF, after a lot of fights, that things were working. By the way, it is the US Treasury that actually resolved the fight between me and the IMF. And they came up and said, this is the best solution that Africa should have of M-Pesa. Because then all of a sudden you find currency outside the banking system has come into the banking system. How does it come through the banking system? Through the payments infrastructure. Anyway, I can talk about this until cows come home because of the way. But the most important thing is also to improve the AML CFT framework and even a regime. For us, it was very, very important. But we have also shown that it had the potential to reduce poverty across. And because I've provided so many examples, one of the things that I always remember, the initial support from DFID was that that time they gave £1 million, and they said, if it's going to contribute to financial inclusion, we really need to support it. But all the things, what changed is very important, because one of the things is about creating a forward-looking monetary policy framework. The central bank was now working. By the time everything was wounding up, we had now a new modern central bank with all the features that were looking very well. But the most important thing for me is how savings were affected. Women could save in instruments that cannot be encroached. You saved in your phone, you have a password. It cannot be encroached. But the more important thing is that those savings, and even digital savings, and even digital lending, actually helped even the small traders. So essentially, it was a revolution, and it has been replicated across so many countries. So for me, these are 3 areas that I thought were very, very crucial in terms of where we are coming from and why we believe that aid that is targeted can improve not only capacity at the individual level, but capacity at the institutional level. I worried about governance issues, corruption. We are living in countries where things may happen. But I think finance is very sensitive. And some of these things happen outside the circuit of main government. What are the lessons? Because it's very important. I can see she's coming closer to me. I was in AERC, and I was also, even as the executive director, I was also a timekeeper. So we needed even to make signal. I can see the signals you're making. But let me make some final conclusions. What are the lessons here? Because I focused on individual capacity, and that will lead to institutional capacity. And in fact, when I rejoined the AERC, have been removed from AERC twice, one to become governor, and the second time was 2022 to become Minister of Finance. But when I rejoined AERC in 2018, I actually created one of the objectives was to see how we work across national think tanks in African governments, because they are closer to government than they can influence policy. So you can see that AERC is not just training capacity at the individual level, it was even moving into the country level. But what can we say now about aid effectiveness from what I've given, I've paraded here? Aid can be effective and important when lightly targeted. And for us, we have seen that context matters quite well. And the importance of capacity building is critical. And we have seen that there are also a lot of spillovers. M-Pesa can influence even the tax system. We have been talking about how you can actually influence the tax system. And look at even during COVID, we used the M-Pesa and the data that we have to construct targeted social protection programs in urban areas. A combination of targeted social protection programs and the lockdown actually reduced, with a paper that was published from AERC, reduced the spread of AIDS by 9%. You can see, all of a sudden, many years back, we talked about growth and inequality. We never wanted to talk about redistribution. But we have realized that actually redistribution can take place through targeted social protection programs. The second, e-government services are very important. There is diverse products that have come in, and I can tell you that these products cut across all sectors. And I've seen that the World Bank now has come up with digital payments infrastructure. That is very, very important. I remember in 2019, I published a paper in CGD, Center for Global Development, on digitization and state capacity. Because I was fearing that we may not push the digital evolution further just because of state capacity. And you can see now the World Bank has come and said digital payments infrastructure is critical. It serves all the sectors. And finally, we have seen that financial development, once it takes place, it pulls the whole economy with it. So I wanted just to concentrate on those areas because they are also part of the influence that I have had in the Kenyan economy. I've influenced when we were governors, because all the governors in the East African region work together. So in a sense, I also influenced them to take up. I remember Uganda was very, very apprehensive, but Tanzania and Kenya were working very closely together. But today, everybody works together. I've seen even papers that I've published that are showing 5 countries. They have gone even to Cote d'Ivoire, that product of savings. So in a sense, we do believe that these are success stories. And we do believe that those success stories have moved the economies in those regions, especially in Kenya and the East African region, very well. Thank you very much. I hope
Thank you so much for a wonderful presentation. Thank you so much. I don't want to interrupt you, but I know there's so many questions.
Yes.
And we want to leave some time for questions.
Yeah, okay.
And before I have a lot of questions myself.
Yeah.
So before I hand over to the audience, and my colleagues will walk around with a couple of microphones.
Yeah.
Last week when we spoke in preparation for this, you said that when you speak about institutions, you get very emotional. So I was curious what you meant by that.
I get very emotional because most of the poverty you find, especially in rural Kenya, where I come from, most of the economic activities has collapsed because of institutions, because of the weak institutions, when government overrun institutions. I didn't want to go to the extreme, but you can see that there's a lot of literature coming up. For example, I remember one time we did some work that's early 2000 on what makes civil wars persist in African economies. And one of the conclusions was that in those countries, there is presence of mineral resources or natural resources that can be rooted and coordinate a rebellion against the government. And you can see it's a failure. Institutions have been overrun. But of course, Paul Collier insisted that we need to bring Kenyan example in there. And why Kenyan example? Because there were cycles of violence during election time. Again, it's an institutional failure problem. But we came to realize when we had to bring a chapter in there that in Kenya, being in government was a rootable resource. You can use the existing laws, or if even enact new ones to effect resources to yourself and to your cronies. That is an institutional failure problem. And that is why we added that chapter. That book was published by the World Bank in 2005. But subsequently, we have seen people who have come up with even more elaborate work. Stefan Deacon in Oxford published a book in 2022, and he actually argues that actually development in developing countries is a gamble. You can imagine. What does that mean? It says that actually it depends on the elite that captures power after elections. If it's a development elite, then you get results that you see in China in the last 50 years, India in the last 30 years. You can see countries like Malaysia, Vietnam, and even in Africa, Rwanda. But if it's captured by a rooting elite, then you see the results that you have seen in Nigeria in the last 30 years or so. Nigeria now has some of the most poor and impoverished people in the world. That is where India was 30 years ago. And Kenya ranks about the top 5. That's why I get emotional, because it is the institutional failure problem that becomes a problem. Yeah.
Thank you. Yeah. I see so many hands. Ulf, first.
If I may start, Ulf Kjellsting, I'm heading the Africa department at SIDA. And firstly, Professor, I would like to say thank you for coming, and thank you for bringing up M-Pesa, because it's so revolutionary. I'm also a friend of institutions. And the thing is that it really affected everybody in the country. So that's a fine thing, and we're so proud to be part of supporting that from the beginning in FST. The other part is the innovation part, which is so important, because this was really an innovative thing when it happened, and you had the meeting in 2007. And I can relate that 10 years later, I was based in Tanzania. And frequently, I got calls from Swedish financial entrepreneurs, because a few years later, we had a very minuscule in France, M-Pesa in Sweden called Swedish. It was 10 years later. It didn't have the savings part. And these guys were calling me and say, hey, just give me the money, you know, I can show Africa how they do it. So I said carefully, please Google M-Pesa. They've done it better than 10 years ago. So this is also how innovation and learning can be crossover, not within our community learning and then applying to you, but actually the joint learning and the inspiration from countries like Kenya. Thank you.
Thank you.
So much. Thank you so much.
Let's take a few questions and then we'll...
By the
hand
way,
back
even to add to your question, one
Professor.
time I was in the US and I have a small farm. I paid my workers the salaries, even standing at the podium, just like that. So you only need the network, that is the telephone network, and you just do everything. And that's quite an innovation.
Okay, I think we have time for 3 quick questions.
Thank you very much for an interesting presentation. My name is Joanna Kurosh. I'm a development analyst at the Ukraine unit at CEDA. And I've spent most of my professional life working with human rights in Eastern Europe. Connecting to what the minister said about finalizing development cooperation that doesn't work and scaling what works, what is your view on continuing work in countries that become autocracies or slide down in democracy? Thank you.
Thank you. We'll collect all the 3 questions. Yes?
Thank you, sir, for the nice presentation. Tommy Carlson from the Swedish Tax Agency. You spoke very nicely about the capacity building, and as we talk about the efficiency and how to measure, that's something we all struggle. Can you give us some good examples from your perspective in Kenya on how capacity building in the long term can give a good evidence-based results? Thank you.
Thank you. And one more.
Thank you, and thank you for a very interesting presentation. I'm Katarina Ragne from the MFA. You touched on it on the very last part of your recipe here on the corruption part. But you started out with capacity building, and I think we need to tie those together, and I would like your comment on that, because we talk so much about capacity building, while the truth is that there is capacity. I've met so many African Minister of Financing asking, oh, we need capacity. We don't have capacity for this. And then you see a lot of very intriguing corruption schemes that the very finance minister is part of. So there is a lot of capacity in Africa that are not used for the right things. So we really do have to connect these parts and not only speak about capacity building. So I really would like your comment on how you see the corruption and how do we deal with the corruption in the development cooperation.
Mm-hmm. Thank you. So 2 questions about capacity and one on how it relates to corruption issues. And then we had a question about whether development aid should continue to autocratic states.
Thank you very much indeed. And let me say that corruption and I even used to say that poverty, everywhere you see poverty, is an institution of area problem. Then you go down to diagnose what is the institution of area problem here coming from. And then one of the things about corruption is actually to rob what actually could have been used to by the populace. But I think when you distort also should I say, when you distort the structure of the economy because of corruption, that is where we go into. And that's why when I talk about capacity building, I'm talking about capacity building not only on the individual level to understand what is happening, but also at the institutional level, because we really need to hold the rules of the game. Regimes change and everything changes like that. Actually, you may find that overnight regimes can change when regimes change. I served as a central bank governor under President Mwai Kibaki. And all of a sudden, there was no talk about corruption, because the few corruption cases that came, they were not, even before they were taken to court, there was naming and shaming. And all of a sudden, everything went quiet. You're right, that capacity is there to do the right things, but it is covered by the institutional failure problem if somebody wants to overrun the institution. Right now, I don't mind even if I'm quoted, right now, the current president overruns all the institutions. And that is why everybody in those institutions will have to conform for fear. But I refuse to do deals in the Ministry of Finance. I can't do deals. I know. It follows you to your grave. It doesn't go away with the regime, by the way. There are people who are my friends that were caught up in some of those things, including in the central bank. And even by the time they died, they were still being followed by those things. The cases were not concluded because it becomes a major punishment. Now, it's only capacity at the individual level and the institutional level that can give you that courage to say no, because you know it will follow you. Regimes change and rules of the game change. And that is one of the biggest lessons. Actually, there are some people who actually argue that I would not have succeeded with M-Pesa, for example, if it was a different regime. And I've seen it. There's a Minister of Finance who even almost stopped M-Pesa. It's only that I reminded him that the central bank is independent and you cannot direct the governor of the central bank. But even having said that, because the big banks were fighting, I had to go down and do what he wanted. So what I'm really saying is that what works, by the way, you find that financial sector is difficult to attack directly. And that is why I'm saying when you see the success, we are seeing the success because it's starting from micro level. They are very far away from the law and all that, and nobody cares about the small M-Pesa transactions, the savings that it's taking place. We are not going to see an overhaul bank failure. That's why we're saying those that are succeeding, let's push that success. The second thing is, and especially on capacity, as we increase more people with qualified and able capacity, they are going to populate in institutions. And obviously, this is where things will work for them. I do believe, and I agree with you, most corruption is regime related. But that regime, for example, in Kenya, the maximum time for a regime is 10 years. Of course, we are going to see impatient with the Gen Zs. I think we got very surprised by the Gen Zs because they're a big group now in Kenya. And all of a sudden, everybody is becoming sensitive. But you don't become sensitive until the election time comes in, because it is time to pay back. And that is where we believe that institutional failure can be corrected by the punishment you get during the elections. And that is where we believe that everybody will play by the ear because you go back to doing the right thing. But we still need strong institutions to come and say, look, we need to punish past cases of corruption, whether it is presidents or whatever, and then we deter the future. And that is what the Gen Z message is coming through. So I do believe that the institutional failure problem may not last for long when we have capacity. That capacity can be used in the future. That capacity is there. We don't have a shortage of personnel. It's only that we don't go out to the market. Let me give you an example. I went to the central bank and everybody was telling me how monetary policy works. And I told them, I look like I'm in a strange place because what you have described to me, these are people in research department. That's not how monetary policy works, unless you don't know your country. And I gave a few examples. Okay, I said they deal with monetary base. Yes, I said, give me the relationship between monetary base and inflation. They couldn't. What about money multiplier? They couldn't. So essentially then I asked, what happens? How do you recruit economists? They said they advertise for management trainees, and then if you see in your CV that you studied economics, you are taken to research. I said, no, it doesn't work like that. You go and say, I want a macroeconomist, I want someone with a bias in this, statistics and all that. That capacity is in the market. And that solved the whole problem, not only in central bank, but all regulatory institutions. So when the minister is saying there is no capacity, there is a lot of capacity. They don't want to look for it. Sorry, I've given long, winding answers just because we are going to get time to discuss each and every issue that is coming up. Thank you very much.
Thank you so much. And I hate to interrupt you.
So, thank you.